Welcome to Beyond Bitcoin's Bonus Hangout Edition. To help further educate the BitShares community of potential partnerships and opportunities that reaches well beyond our ecosystem. A common ground where ideas and plans come to unite, wielding the true potential, possibilities, and power of the blockchain technology that we call BitShares. If you feel engaged to participate in these crucial conversations, then please visit beyondbitcoin.org for future hangouts. Also, please remember to vote for our BitShares delegate, Fuzzy.BeyondBitcoin, to help keep our community informed and up to date. On behalf of the Beyond Bitcoin crew, we want to say thank you, and we appreciate your time and trust. Now let's listen in to our current guest.
First, I'm gonna just talk for a while, and then we'll just answer any question basically. The system is really complicated. What we're doing is complicated BitUSD, if you could say it like that. And it's not so we haven't even worked on the kind of material that we're currently seeing in BitShares, where there's educational material on the bit assets and that kind of stuff. So this is actually going to be the first time we're even trying to explain what it is doing to the public, in a way where we actually want many people to just understand how the system works. So there are, I think, three concepts that needs to be introduced. So first of all, there's Maker, which is the app that Nikolai's working on every weekday from 10 a.m. to 11 a.m. EST, which you can see live. And it's like a autonomous bank and market maker. That's how we explain it in a single short catchphrase. And what Maker does is it maintains and it regulates and it creates, I guess, what we call the DAI credit system. And that's the second important thing we're working on, which is the DAI. The DAI itself is our primary stablecoin. The primary stable token in our entire ecosystem is called the DAI or DAI. It doesn't really I used it first because I thought it was a cool Chinese word, and then now we're explaining it as DAI is decentralized autonomous insurance, but that's something we added on later. But the reason why we call it that is because the fancy feature that we have with this stablecoin is that it's insured. That's the primary thing that sets it apart from bit assets, for instance. That if there is a black swan event, the entire Maker system is set up in such a way there's an insurance mechanism that will bail out the collateral in case there is a black swan event in one of the collateral types. So that's the other thing, where the DAI has multiple collateral types. In fact, it's meant to be collateralized by anything, and it can more be seen as I guess I'd call it a general crypto bond that basically can be issued by anyone holding good collateral on a blockchain that Maker is currently supporting.
Could you explain that?
Yeah, let me just explain. So now we have Maker, which is the app itself, right, and the DAO as well. And I think the thing you can closely relate Maker to will be BitShares. It's Maker is an ecosystem and a community and an application that can be that markets itself kind of like BitShares does, right? Where it has forums and a community and so on. And then there is and this community, what it does is it promotes the DAI and as its primary product and monetizes the DAI as well. And that's a little bit different from BitShares, because I'd say that the BitShares primary product is graphene, right? The blockchain itself, which is also why, and this is something I mention every single time I talk to someone in the BitShares community about this. BitShares and Maker aren't really competitors, because it's kind of like hardware versus software, something like that, where eventually Maker will actually probably support BitShares and be active on the BitShares blockchain itself. All that will require is a two-way peg. We also putting the Maker coin, for instance, on the blockchain, because it's and I explained this in the post where I wrote about it. Where I announced that we were making the share drop, and that our market maker has started doing the MKRCOIN on the BitShares blockchain. And it is that we want the BitShares community to trade our asset and be involved, and that's why we're doing the share drop, right? Because this is a community that's most suited for stablecoins. This is the only community that is specialized in stablecoins for more than a year and has knows what they're even supposed to do and how they're supposed to work and so on. And obviously, just like with BitShares, Maker, the success or failure of Maker is going to depend on its governance, on the strength and intelligence of its community, and how well people are able to manage this DAO once it's live and autonomously just working on the blockchains that it will end up working on. Yeah, so I think we should keep it to the Maker and DAI at first, and then I will explain some extra features that are on top of that, which is the e-dollar and e-yuan, e-other thing currencies, which are kind of analogous to bit assets.
Do you mind if I just cut in real quick with an explanation of what I'm thinking I'm hearing here? Maker is like an app.
Right.
Where and this is going to be is this going to be available? Who is this going to be available to?
Well, what it actually is a contract system. So it's like a bunch of contracts that have been uploaded or deployed, as we call it, to the to the Ethereum blockchain. And it's available for you. Anyone can interact with them according to the rules of the system. That means anyone can use Maker to issue the DAI with, which is shorting BitUSD into existence. We call that issuing, because it's not done through a market event. It's done through a single issuance by a single person. So all you have to do is you put up some collateral, and then you lock them in something we call a CDP, and in return you get the DAI. And so a CDP is short for collateralized debt position, and it's actually kind of analogous to a CDO. The things that caused the financial crash, which are what they are is they're debt obligations with some collateral attached to it. The difference with us is that we don't have crazy collateral limits that allows it to destroy the economy. Instead, we are our CDPs are extremely well collateralized, just like bit assets, and they have strong rules and strong system for enforcing that there will always be enough collateral available. And in the fringe case where something actually does get under collateralized, then we have an entire autonomous insurance system built that will then bail out any bad debt. And that's where the MakerCoin holders come in. That's where MakerCoin owners they have responsibility, I guess you could say, because they are the ones that will pay if there is a black swan event, and they are also the ones who are in charge of setting the risk parameters that decide such things like collateral requirements, margin limit, debt ceiling, the amount of debt that can be in the system in total, and those other parameters that are generally they are really, really broad macroeconomic parameters, meaning they're insanely difficult to set and insanely difficult to analyze because you have to understand the entire economy to set them properly. But that's why we need an entire community. It's not enough that there's just one person or 10 people sitting down and looking, hey, what's the best to do with this? We literally need everyone involved in the system to ultimately look at it and figure out, is this safe or not? And that's why we want to spread the MakerCoin as widely as possible, because then if you're holding MakerCoin, it means you have a vested interest in ensuring that Maker doesn't suddenly do something crazy and allow some crazy collateral things. I have some stuff to show, some I guess graphs you could call them, because that's one of the things we're working on. We're working on a proper statistical analysis of all the risk and the different feedback loops and just the mechanics of the system in general, in an attempt to prepare ourselves for what's going to happen once we deploy it. So I'm actually going to share that here and then just explain one of the mechanics we have, which we call collateral redemption. Nikolai, he just linked our white paper in the chat, by the way. I guess I should probably have linked that there earlier.
So that is http://makerdao.com/dai.pdf for anyone listening.
Right,
Please
or you can just go
ahead,
to makerdao.com. There's a link right on the front page, so it's easy to get to.
Okay.
And that's our main website, makerdao.com. We also have a forum there and links to a code, and eventually that's just where we're going to have everything related to Maker and the DAI.
Certainly.
Yeah.
So-
How does this work? Anyone can explain, please? Yeah. Well, it's very complicated, and I will show you something now that like shows one of the mechanics, but ultimately there's none of this that's simple. So there's none of it that can be easily explained. And yeah, something like it's like just a magical system that just works. That might be the best way to just try to explain it to someone who is not technical enough to understand the white papers. And eventually we're gonna have our hero Cass working on infographics. And ultimately our goal is to actually make the entire thing like very accessible, because we will, instead of writing the mechanics and then writing a white paper and talking about mechanics using complex terms, we're going to draw it all and just try to like illustrate it in some way that will be more intuitive, if possible. Okay, but now I'm going to link something in the chat that you could have a look at, and I'm going to explain one of the mechanics we use for like ensuring there's always enough there's always enough collateral behind the die. If you take a look at this album, you'll see there's like a bunch of graphs and stuff. And what we're trying to show here is how our margin call system works. And we actually don't really like margin call is just one of the things we use this system for. We call it collateral redemption because this is the system that we use to interact with the CDPs with. And a CDP is a collateralized depth position, the objects that create the die in the first place, where the way they work is they're like a smart contract that you put some collateral into, and then depending on how much collateral you put in, you're able to issue an amount of die in return. The way it is at first is there are multiple types of collateral, like multiple risk classes. At first we'll just have high risk, low risk, where we say low risk is Bitcoin and gold, and then high risk is Ether, MKRCOIN, and some other Ethereum assets that we're going to support. So let's use Bitcoin as an example. If you want to issue DAI using the Bitcoin as collateral, you need to put up 150% collateral in Bitcoin, compared to how much DAI you want to issue. Meaning, if you put up $150 worth of Bitcoin in a CDP, you're able to issue 100 DAI, which are each worth $1. What then happens is your CDP stays on the blockchain and remains there, holding its collateral locked, just like it works on BitShares, where the collateral is locked on the blockchain, and you're unable to access it after you have shorted BitUSD into existence. You can't actually get it back until you cover it again, meaning you pay back the amount of stable coin that you initially issued. So if you use $150 worth of Bitcoin to issue 100 DAI, you'll have to pay back 100 DAI later to get your $150 worth of Bitcoin back. And then, of course, by then it might not be $150 worth of Bitcoin anymore because its price changes. And that's what these graphs are about. Because, of course, there's a big problem if the value of the collateral starts falling too much. You could have it become under-collateralized. And the way we prevent that is that every CDP can always be bought back by anyone. Like, anyone can redeem the collateral in the CDP, and the value they can redeem it at depends on how much collateral there is in the like how well collateralized it is.
What would be an incentive to for anyone to do that?
Yeah, that's what this graph shows. So if you look at the first graph, right, there is on the y-axis, like on the side, there is like some percentages, and then on the x-axis, like in the middle, there are also percentages, but there are like some different percentages. And what they show in the middle is how much collateral there is in the CDP, like how the collateralization is in the CDP. So you can see at 150% collateral, that's where we start, right? That's where we put in 150 USD worth of Bitcoin. What the modifier, as we call it, the bounty modifier, is then minus 5%. If you look down, like if you follow it down, right, you can see it's sitting out at between minus 4% and minus 6%. And what this means is if someone has a CDP sitting on the blockchain that is 150% collateralized, anyone else can come and buy the Bitcoins straight out of the CDP as long as they pay a 5% penalty. So they will get a price that's 5% below the market rate according to the maker price feed, which is like a complex system we have for like using multiple price feeds to get a single very stable and like very reliable price feed that can survive things like some of the underlying price feeds going down or being malicious or something like that. So that's how it works. At 150% collateralization, your CDP can be redeemed by anyone who's willing to pay a 5% penalty. The penalty that the redeemer has to pay is paid out to the person. At 150% collateralization, meaning you have 150 USD worth of BTC backing your 100 DAI, someone who redeems your CDP will have to pay you a 5% penalty. So you get a 5% bonus. And the reason why you get this bonus is because you were forced to go into this deal, right? Your CDP is just sitting there and anyone is able to redeem its collateral at any point in time. So while the CDP is still well collateralized, meaning its collateral ratio is high, like 150%, which is very healthy for a Bitcoin, like a Bitcoin collateral, then they have to pay you a bonus, right? Because you're the one who's like helping the system by having a highly collateralized CDP. As your CDP then begins to decrease in its collateralization, so as it becomes more and more risky, basically because the value of its collateral goes down, right? So it gets closer and closer to the point where there is not enough collateral to back all the DAI that has been issued. And then what happens is it goes all the way down to 125%. That's where the cutoff is, basically the margin call cutoff, as we call it, which is where the bounty goes from being a penalty to being a bonus. And that means if someone gets if someone's CDP goes down to having less collateral than this cutoff point, meaning if let's say you issued 100 DAI using 150 USD worth of Bitcoins, and your Bitcoins now decrease in value to the point where they're only 120, or let's say 124%, like 124 USD, right? So they're only 124% collateralized. Then someone who redeems you will suddenly get a huge bonus. As you can see, like the line just goes up like really fast. It has a very steep slope. Yeah. And very quickly, if you redeem the collateral of someone who is under collateralized in this way, you will get a very huge bonus in like the broader terms, right? So at 120%, the bonus becomes 20%, meaning like you will make an instant profit of 20% on the trade where you buy someone's collateral if they are they're collateralized this lowly. And at that point, it basically becomes margin call. So it's the exact same mechanic as a margin call, where if the collateral, like if the margin on your position goes too low, you're forced to sell at a bad price, right? You're just forced to liquidate your position in order to maintain the integrity of the system, because we want to make sure there's always enough collateral. And then someone asked if this system is resistant against black swan events. But let's first think about what a black swan event is in this in this context. So basically the way it works is at 120%, you will get a 20% bonus for calling for like redeeming someone's CDP. But if the collateralization goes further below this, like if the collateralization goes to 110%, then you will actually only get a 10% bonus for redeeming. And the reason for that is that there's just no more collateral left, right? There's only 110% collateral. So there's just not more collateral to get. Like you're just getting all the collateral and you can't get any more than that, because that's all there is in the CDP. And then the really bad thing is, what if the collateral, what if the bonus goes down below zero again, right? What if the collateralization goes to 90%? Then now you will only be able to get 90% of the collateral as compared to the debt you have to pay down to redeem it, meaning no one will do it, right? There'll be no rational choice, no reason for anyone to take a bad trade. And that's where Maker steps in. That's what the function of Maker and the MKRCOIN is. Because in this case, once a position goes below 100% and becomes under collateralized, it is sort of declared as a black swan event or something like that. There is like this autonomous mechanism where Maker then goes in and just is forced to buy up this CDP. So it's forced to do this losing trade where it buys the bad collateral by paying the full debt. And this is the entire like business model of the system, because then in return for this, Maker always takes an insurance rate on all debt in the system. So like Maker takes some money out of the system in return for insuring the entire system, meaning that on average yields are slightly lower, but the trade-off is that the DAI is a lot safer because it's insured by the value of Maker.
Yeah. So it pools the DAIs for future times of instability.
Yeah, and not only that, actually, it also inflates the Maker coin if there's not enough DAI in the Maker vault. So the Maker vault is Maker's current account, you could say like that. That's where it has all this liquid cash. And if it runs out of cash, then it takes up, like then it creates new DAI out of nothing through a mechanism called emergency debt. So it will create like a bunch of emergency debt, and it doesn't matter how much is needed, it will just create enough to always make sure that there are no under-collateralized positions. And then the mechanic is, as long as there is emergency debt in existence, Maker will begin to autonomously inflate the Maker coins and just sell them off in order to pay down this emergency debt over time, or ideally right away if that's possible, depending on how big the black swan event is. And this is how all the risk of the system is transferred.
Wouldn't that incentive? Yeah, go on. Sorry, go on.
Yeah. So the point is, the point of Maker and like the basic goal of this system is to transfer all the risk to the Maker coin holders, and turning Maker coin into the most risky asset in the entire economy. Right? It's going to be the asset that basically takes a beating every time there's like a crash or like there is some serious economic bad stuff going on in the system. It's the Maker coin holders who have to pay. In return, they get a huge pay, like they get a nice income stream as long as everything is going well. And in addition to that, they are the ones with the power to regulate the economy, right? Because they are the ones who are setting all the risk parameters, such as again, like the margin requirements, the collateralization requirements, and the debt ceiling. With the debt ceiling is likely going to be the most interesting to like adjust on a day-to-day basis, because that's the stuff where you can that's where you can really like easily determine how much risk are we willing to take. So you could say, for instance, okay, we're not willing to take more than we're not willing to have more than 100,000 DAI collateralized by Bitcoin, for instance. And ideally we want it to be diversified, right? So we want some DAI collateralized by Bitcoin, we want some DAI collateralized by Ether, some by MakerCoin, some by BitShares if possible, if we can get them on the Ethereum blockchain, and so on, like by every asset. We also want some backed by gold, blah, 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 so on. The key is the more diversified the collateral is, like the collateral portfolio. If the collateral portfolio is very diversified and has many different assets that all have like different volatility and different cyclical and counter-cyclical price evolution, that just means the overall risk and overall volatility of the entire collateral pool goes down, and it gets cheaper to insure it, right? It gets safer to insure it, and generally there will be less problems.
Other name is asking here, who determines the bounty percentage DAI is pegged to what? What determines the ratio of collateral and underlying?
Well, I mean, the short answer is MakerCoin holders. They determine everything. Of course, there is some initial values, and they are actually, I would say they're arbitrary. Like they are based on the best guess that we have using, for instance, we have our starting point is that we have taken stocks. Like we have taken the rules there are for how you do margin trade and how you use stocks as collateral. Because stocks are very risky, right? And they look a lot like cryptocurrency in the way they can change in price wildly, and they can have sudden crashes and so on. And basically, the rules for stocks are pretty simple. Since something like, I guess, the last 40 years or something, the Fed has basically determined that the collateral requirement for stocks is 50%. or like I guess in our terms that would be 200%, right? You need the initial margin for margin trading with stocks is 50%, meaning that for every $1 you have in debt, you need to have $2 in collateral backing that debt. So that's our starting point for the high risk class of our collateral. And then we have decided to make Bitcoin less risky, and that's actually primarily a business move. That's because if we look at the ecosystem of margin trading platforms that currently exist, like Bitfinex, and well, Bitfinex is my favorite, right? So Bitfinex is the biggest one, and they are right now doing 150%. So they're doing 3x margin, like 3x leverage, right? So you can, with one Bitcoin, you can actually get exposure to 3 Bitcoins, and Maker will allow this too. So we're able to compete with all other platforms, basically. But the important thing to understand is that all of this is something that will be determined ultimately by the MakerCoin holders. And it will be like continuously revised. And what we want to do is we want to have a huge community of people who are all very vested in constantly like researching and like helping out with just giving input on whether or not they think these parameters are set correctly currently. And then what we're trying to get is a sort of wisdom of the crowd thing, right? Where all the guesses of everyone combined are going to just be more accurate than a single person sitting down and making up some arbitrary numbers. And yeah, in the long run, this will be done through a future key of some kind, if you're aware, like if you're familiar with that term. But that's basically using prediction markets to make decisions.
And maybe we can go to the specific question: who determines the bounty percentage specifically? So you can explain how the MakerCoin holders would, specifically decide on this parameter.
Well, so basically, this is actually a question of like the basic governance model of Maker. Yeah, so to answer that, I have to explain what Maker even is. And Maker is, well, a dApp, right? It's like a contract system, and I think the term for it is a dApple, actually, which is a kind of dApp that Nikolai has basically invented, which at its like core feature is that it's dynamic, meaning that it can be updated on the fly as it's running. You can upgrade it, you can change it, you can delete parts of it, you can like add on parts of it, you can install new features, you can do anything you want while it's running on the blockchain in real time. And the way it does this is through something called a kernel contract, which is actually similar to what you use in an operating system. In fact, I think Nikolai's rationale is that he has designed it as an operating system from the inside, basically. But I'm actually not too qualified to speak on this, so this is just my guess on it. But so the point is this: everything is controlled through root access to the kernel, right? So if you have root access, you're able to literally change anything in the system, including bounty percentage or collateral requirements or whatever else you want to do. And the way you gain root access is through shareholder vote, basically, or shareholder decision. And then there is a security feature on top of this, because obviously we don't want a system where the shareholders can just decide to steal all the money, because theoretically if there's no security built in, then they would actually be able to do that. Like they would be able to say, okay, we will get root access, and then we will make some root action where we take all the collateral and send it to ourselves or something like that. But to prevent this from happening, we have built in the priming delay, which is the primary security feature. And what it basically is that after you make some root action, like after you say, I want to do this and this upgrade, and everyone approves it, and there is a successful vote implementing it, then there is some specific time where the system is just waiting, and it functions like before, but this root action is queued and ready to get executed after some set amount of time, which at first will be maybe a few weeks, and eventually will be something like a year, really long, basically. And the idea is then if there is some malicious action being taken where it's something like steal all the money or something similar to that, then all the users of the system will just have time to like notice, oh yeah, they're trying to steal our money, and then they can just leave the system, right? They can they can redeem the collateral for all their DAI, and the DAI count will just go to 0, and then there'll be no collateral left to steal. So that's the basic function of it. And yeah, so to get back to the question, MakerCoin holders vote on the bounty percentage through root access.
And you're talking about the bounty percentage will be changing at scale, or rather you expect it to be changing at scale.
Well, not necessarily. I mean, honestly, I actually have no idea how this is going to look like once it's live. Perhaps it'll turn out that the constants that have been chosen right now, they turn out to be perfect. Who knows? It could be, and it could be not. So it all depends on what happens, basically, and ultimately it's going to be a question of staying on top of the data and constantly trying to figure out what information we can get from the way the system acts once it's live, and then making decisions based on that.
Well, I'm gonna murder this name. I'm sorry to you, sir. Dickalcog 3NID3. How does Maker relate to the BTS 2.0 bond market?
Well, so this is a question of our long-term plans with BitShares, actually. So one of the things we've done, right, is that we have put MKRCOIN on BitShares, which is just like a first step to get our asset on BitShares, right? But personally, at least, my long-term aspiration is that actually to get Maker to exist on every single blockchain in existence. That's like our ultimate goal. And the reason why we can do that is because Maker is not a blockchain, right? Maker is an application. And in 2.0 blockchain systems, two-way pegs are actually very easy to implement, like sidechains, basically, right? Where you can trustlessly move an asset from one blockchain to another. And that even includes like moving entire smart contracts. So you can have the real Maker system simultaneously existing on multiple blockchains and working almost seamlessly as if it was just a single application. And yeah, I mean, I think the best way to think about that is something like hardware versus software, where the blockchains are the hardware and applications like Maker are a software. And then if you have Maker existing on several blockchains, it's something like having multiple hardware systems working in a cluster or something like that. So the bond market is so my point is actually that we can move the DAI, right? Our primary stable token, our insured stablecoin, we can move that to the BitShares blockchain, and then it can be used on the bond market on the BitShares blockchain. Another thing it can be used for is as collateral for smart coins, for like private bit assets, which is one of the features of BitShares 2.0. And yeah, we're going to promote that. Like we want the DAI to be like one of the go-to stable assets that people use whenever they want to issue some, like they want to make some low risk financial product or coin of some kind. They will be able to just always use the DAI, and it's like a basic asset they can use.
Can either you or Nikolai speak to the sidechain concept and how that's going to work and if it's going to scale? Because
so honestly, like I don't want to talk too much about sidechains actually, because it's like a subject that is overdone. So the primary thing to understand about sidechains is they're very far out in the future still. They're many years out in the future. They're not going to happen anytime soon, but they will happen at some point. That's pretty much certain. And in general, everything in the blockchain world will happen on a scale of decades, right? This is what we keep saying again and again to ourselves, right? We are just in the beginning, blah, blah, blah. We're the early adopters, which is totally true. I mean, we are not, and we haven't even seen the beginning yet. In fact, we are just really, really very early on in the life cycle of this.
It's crazy how early we are, even considering that we've been into this probably since Bitcoin's been out.
Yeah, I mean, all of this can still change, but ultimately, when I'm talking about our long-term plans and I'm talking about how I want to have a sidechain, a two-way peg to BitShares and so on, what I am actually saying is that we have a very strong economic incentive to figure this out, right? I mean, it just means that there's no reason for us not to do it, and there's many reasons for us to do it. So that's actually why like I wanted to. Well, I mean, that's also a reason why I wanted to do the share drop here on BitShares, because the way I see it, Maker is like Maker and BitShares are like two things that complement each other again, right? It's like a blockchain that is optimized for exchange, and then an application that is optimized for ensuring stable assets, basically. And sidechains are going to save everything, right? They're going to save the world and cure cancer, and they will come one day and make all our dreams come true. Okay, interesting question here.
Because
what is the source of our development funds? How long will they last? So the source of our development funds are our angel investors who bought the initial batches of MKRCOIN, and are the ones like we collectively refer to these people and ourselves as Nexus. So Nexus is like the group of people who initially got together and made it possible for us to work on work on Maker, basically. And all I can really say regarding to the funding is that we have enough. Like, we are not gonna right now it's looking really, really good, and we are very lean, and we are very, very, I mean, I am personally very careful with making sure we're always going to have enough money, because this is one of the things I've seen projects do again and again. Right, we've seen it. I mean, we've seen it with BitShares. I mean, there were money thrown away on stuff, and we've seen it with Ethereum terribly. With Ethereum, right? They held all their money in Bitcoin and lost like $10 million, which is like $10 million that could have gone into blockchain research that just got thrown down the drain, which is, I mean, just a huge shame. And there's no way we are going to make that kind of mistake. We are going to, we are like, I mean, we are economic agents, right? Our entire app is a system that's made to optimize economic values. So yeah, sorry.
5Ds who asks a question regarding what you're talking about right now, actually, and it's how do I profit off of MKRCOIN?
Well,
so you're talking about, on one level, you're talking about the sustainability of paying for the development, but then on the other level, we're talking this opens up the talk about the community.
Yeah, how do you get money? Yeah. So that the question is actually, what is the value of Maker? Like, what is the intrinsic value of MKRCOIN? And the intrinsic value of MKRCOIN is like its value proposition is a constant, like a continuous cash flow that basically works like this. Maker is like this profit-seeking entity that's ensuring the DAI and earning money from this. And then it takes all this money it earns and puts it into the Maker Vault, which is like its current account, or like something like its business account, basically. And then from the Maker Vault, there's very slowly this autonomous, constant, cash flow into the MKRCOIN through something we call buy and burn, or like a buy and burn bot or something like that, which basically means that some of the money goes to buying up MKRCOIN and just burning them. Meaning that the supply of MKRCOIN will just continuously fall over time, depending on how much money Maker makes. And yes, this is a good point, Lucky Bit. It's not income. It's like the MKRCOIN holder itself will not see any sort of dividend or cash flow or anything like that. They will just see the supply of MKRCOIN slowly falling, so that the price will go up, right? Because there was this constant buy pressure from Maker itself, buying up the MKRCOIN to burn them. And then, of course, sometimes that turns all the way around, right? If there's a black swan event, then it turns on its head. Then there's suddenly MKRCOIN inflation, and Maker will like dump MKRCOIN in the market in order to raise enough funds to keep the DAI holders safe. And this is once again why MKRCOIN is an insane asset, and it's not something that the average person should hold. It should only be people who specialize in altcoin trading and then cryptocurrency trading and understand what they're getting into.
Yeah, we're talking about day traders here.
Well, not necessarily day traders. I mean, it's not something you have to buy and sell every day. Like, you can also just be an investor that like makes sure that the people who are currently running the system aren't idiots, basically. And then if he one day looks at the people who are active in running the system, like the delegates, like our delegate system, which by the way I'll talk about in just a moment. But like, so let's say like if you're an investor and you one day figure out that some idiot delegate was hired, then you're probably like, okay, this is bad. This probably means that there's going to be unstable stuff happening in the future, and I'm going to sell as a result of that. And that's one of the reasons why. That's one of the way you can contribute to keeping safe, because by selling MakerCoin, you're sending a signal that the system is not as stable as it was before. And this in turn becomes a signal for the DAI holders, because they will be able to look at the price of MakerCoin and use that as like to figure out how safe the DAI currently is. With the goal being that it should be very easy for the average DAI holder to like determine how risky it is for them to buy the DAI using, first of all, the interest rate, like the yield on the DAI, and then the price of MakerCoin.
LuckyBit is asking, so bots can do all of this?
Not only that, actually, we are making the ultimate bot, which we call the Keeper D or Keeper Daemon, which is it's like a bot that also does a whole bunch of other stuff that we are releasing for free for anyone to use. And what it does is basically it looks at all the different things going on in the entire Maker ecosystem, and then it tries to like make profitable trades. So, for instance, what it does is it, if it sees that there is a CDP that has become under-collateralized, it quickly buys it up and tries to get the bounty bonus. And it also does stuff like matching orders on the blockchain, and then it also provides price feeds for a fee and other stuff. That's something we will like. That's something we're still developing, and like the entire concept of this thing hasn't really been officially released yet. But basically, yeah, like this is a system that's made for the actual interaction with Maker should be done by people through bots, because Maker is going to be so complex and have so much stuff going on that it's not really meant for like people to directly interact with the contracts.
You were going to talk about the delegate system.
Oh, right, yeah. So we call our delegate system dynasties. Like we call our delegates dynasties. Or rather, we actually call delegate dynasties. And the reason why we use this weird word dynasty is because our delegates aren't individual people chosen the way it is with BitShares, where, well, I guess not. I mean, BitShares 1.0, right? It's going to change in 2.0, but the way the people who work for Maker work is that it is basically coordinated through a contract that gets elevated permissions to the system. And the first of our dynasties is Nexus, which is what I explained earlier, right? That's how we refer to ourselves. This is like the development dynasty, and it's like the group of people who are launching and developing and funding development of Maker in the future as well. And then Nexus will have some specific permissions in the system that are initially given through a root action, right? A root, like through the MakerCoin holders gaining root access through a vote, and then using this root action, as we call it, like when you're gaining root access and executing some command, what you're doing is you're making a root action, and this root action implements Nexus and gives it some permissions. And as an example, these permissions could include a budget, so like the ability to take some money out of the Maker Vault and use that to fund various operations. And it could also be like actual permissions to adjust parameters in the system. So it could be like, for instance, Nexus could be allowed to change the depth ceilings of some collateral types within some hard limits, right? So there's always going to be like a limit of the power that you give to a dynasty. You'll never just allow a dynasty to like run wild and change stuff without any sort of boundaries or any sort of like buffer to allow the MakerCoin holders to throw them out again if they turn out to be idiots.
So the main point of the Nexus dynasty, I guess, is like getting root access for the purpose of being able to upgrade the contracts while the system is still being deployed and optimized. And so that might look something just like a time-delayed multi-sig between like me, Rune, and someone else. We have a multi-sig for a root action that is time-delayed. And so that's a way, like, even though MKR is what ultimately controls the system, they can give like control of the system to a different contract.
Yep, exactly. And then the reason why we call it dynasty, well, the reason why, the ultimate purpose of this system as compared to something like what BitShares is using, is that it needs to be very easy to just get rid of it. Which is why it's like Chinese dynasties, right? Where what happens there in China was you always have these governance structures that grow really big and really powerful, and then eventually they become corrupt, and then they get thrown out and killed off, and some other dynasty takes over. And that is the frame we want to have for these governance structures. If like any particular person or any particular dynasty makes some mistake or does something that's just obviously bad, it's going to be really easy. Like a single vote, a single root action by the MakerCoin holders will just be able to permanently kill off the dynasty. And that means that, for instance, every person who's included in a dynasty like shares responsibility with everyone else in the dynasty already, meaning that it's actually prudent enough to allow a dynasty to choose its own members, meaning that Nexus has like it's actually safe to allow Nexus to just expand its own members if it wants to. And this is because the existing members of Nexus are all taking on responsibility whenever they expand Nexus, because any new members of Nexus, if they turn out to be an idiot that does something really stupid, it could end up meaning that an entire Nexus dynasty is killed off. And that is ultimately a goal of Maker. We want to make it very hard to corrupt it, basically, and we want to make it very easy to get rid of stupid bureaucratic structures in it. And we also want a lot of dynasties that are we want a lot of diversity in the dynasties, and we want many different actually we want every single a goal, in every single operational I guess value proposition from dynasties, right? So we have Nexus, right? That's the development dynasty, and we want investment dynasties, we want marketing dynasties, security dynasties, educational dynasties, whatever, like anything you could think of that could add value to the system is ultimately possible to implement through a root action by the MakerCoin holders.
Is there going to be more than one dynasty, or multiple dynasty, or a single dynasty at any given time?
Eventually, there's going to be like tens of them. I think that I could see that happening. So right now we have two planned. We have Nexus and then Quant. So Nexus is the development dynasty. Quant is like an investment, trading, statistical analysis dynasty. And the reason why it's like the goal is then to split up their functionality into I guess a group of responsibility, right? So if the development dynasty does really well, but the statistical analysis dynasty just output useless stuff, then it's you can kill off that part, right? You can kill off that governance structure, and you can keep the good dynasty. And in the long run, we can have stuff like competing dynasties, right? So you can have two competing marketing dynasties that both use different methods and have different employees. And I mean, sometimes we'll even like actually compete with each other, but often they will also work together, right? And like share the methods and so on, but still have like different like ways to do their different to achieve their different goals. And the idea is just to allow for as much shareholder choice as possible, and to allow like us to have a system where if some governance structure ends up becoming corrupted, it's actually not a big problem to just kill them off and permanently shut them down and fire all of them.
Is it up to each dynasty to come up with its own self-governance structure, or is this something that will be...
Well, ultimately everything is up to the MakerCoin holders. So if the MakerCoin holders decide that it's up to the individual dynasty to do that, then that's the case. There's literally no, like MakerCoin holders can do anything. That's basically that's how powerful Ethereum and the Dabble framework, the DAppSys and Dabble framework that Nikolai's building on is. It's a programmable application that we can make it do whatever we want and whatever and we are going to, we're really going to take advantage of that, right? We are going to just continuously evaluate, continuously gather data, just never like stop trying to improve the system, because we can. We have that power. So yeah, you could also have something like a self-governance dynasty, as LuckyBit suggested, and you could have something like, let's say, an HR or transparency dynasty or something like that, like a dynasty that tries to to enforce transparency on the other dynasties, like tries to like uncover wrongdoing by them in order to initiate getting them fired if it turns out there's some corrupt guy who is stealing money from the budget or something like that.
Nice. So like an investigative reporter type of role.
Yeah, I mean anything really. It's only over time that we'll be able to see what kind of system works. And that's also another thing. I mean, with Maker in general, there's going to be so much of the stuff we come up with that we will just cut off and like decide, okay, this was actually a bad idea, and just get rid of it again. And that's another advantage we have. We have the flexibility to just like change our minds about something we are trying off with these dynasties, right? So we can have some dynasty and it can turn out that, oh, this was a bad idea, and then we just get rid of it again, and it's actually pretty easy. All it takes is 2 votes, like 1 vote to implement the dynasty and 1 vote to get rid of it.
Lion Danny is asking, can your power kill the project by mistake?
Yeah, you totally can. Like, you can totally just murder it completely, but you can only do it with a priming delay. So if you if some guy decides, okay, I'm gonna use all my MKRCOIN to vote for destroying the entire system, it's gonna take a year before the system actually dies. And in this year, it'll be possible for the other voters to either mobilize to like cancel this event, which is one of the things you can do, right? You can, if you vote to, like during this priming delay, if you vote to just stop it, it'll just cancel and it will never happen. And the canceling an action is obviously instant, right? So doing an action that changes something has the priming delay, but canceling an action that is going to change something is just done instantly, and it's also like going to be easier to do in general, right? Because we will want to have the system to be biased towards being conservative and rather not do any changes than do some reckless changes.
What are the permissions, like for example, of a marketing dynasty? What can they do in the system? And then also, what are the, how does it come into effect? Like, I mean, I would imagine that there would have to be a proposal by someone about the specific permissions a marketing dynasty would have. And then the MKRCOIN holders would have to vote on it. If it's not like that, maybe you can explain how it is different.
Yeah, the lockdown basically means it's easier to think about what we can do in terms of what we can't do, and the only things we can't do are make changes to like other people's contracts, which also includes our own contracts where we deploy them and we don't sort of build them to grant access to what we define to be root access. So we can basically lock ourselves out. You can make it so that even root access won't give you permission to make some change that previously you were able to change. So we slowly want to solidify the core system and the core DAI mechanics, and then sort of the stuff on top, which is the operational things, are completely dynamic, and it's just whatever we decide to do in the future.
Let's say I'm a MKRCOIN holder, and then I propose through code how a marketing dynasty should look like. And then I say, okay, could you please vote this in, to the other MKRCOIN holders? Is that correct?
Yeah, that's right. So you would maybe, you would even maybe deploy your marketing dynasty and start doing stuff. And all you say is, okay, please give us please grant our contract the correct permissions in your system. So then the certain calls that we want to do will work.
So I would say that a marketing dynasty would not, the only access a marketing dynasty would need would be a budget, right? I mean, you need to pay for ads and you need to pay for salaries. So that would be like a very basic payroll permission they would get.
Right, but who is deciding on then how many votes are necessary to give the marketing dynasty the permissions that are written into the code?
How it starts out is that there's a maker stakeholder vote, which has root access to the kernel, and that's it. And then from there, it can evolve however we decide.
Yeah, so at first, it's actually going to be majority, like a basic majority vote by MKRCOIN holders. And then we have a lot of ideas for how we can make it way more fancy in the future.
For things which are like not big design decisions, but maybe you want to decide how to set a certain parameter, you can do things like delegate that permission to a prediction market. So you give you write a prediction market contract, and when it resolves, it does a single call to change some parameter, and then you give that contract permission.
Okay, so in order to deploy a dynasty, 50% of share market MakerCoin holders is necessary.
I think at first we're actually just gonna have it a majority. So like there just needs to be more people for than against, and then with obviously there's some minimum turnout obviously. So with some minimum voter turnout, a positive majority means that it gets like the root action gets implemented, but that doesn't mean it actually gets executed, right? Because it can still be cancelled. So if it turns out that there are actually ultimately more people against it than for it, then the people who are against it will be able to do another root action to just cancel it again.
And to be clear, the core mechanism is MKR majority vote, but we can just give a different contract which does a different type of voting permission to grant dynasties root access, right?
But to do that, you would need root access again.
Right. So originally, so we could set it up. We don't need it again. We say, okay, Rune and I sit down right now and say, hey, in the future, we want to be able to elect dynasties without getting 51% vote. We only want majority votes. So we're going to create a new contract, which is the dynasty voting contract. It's allowed to pull. It has the access necessary to be able to collect the votes, and we can give it permission to do the one call that we write into it, which is give this new contract root access and maybe give them money or something.
Right. Okay.
I see one here from LuckyBit saying, can the bots be extended to support? Can it be extended so the bots can evolve?
So that what can evolve?
The bots.
LuckyBit is asking if it supports AI.
Well, what is it? You can't run an AI algorithm on Ethereum, but you can delegate. Well, basically, what I think what it'll all come down to is you create prediction markets, and then those prediction markets is where all their like real intelligence goes, I guess.
Yeah, so I guess you could maybe use like Maker could be coordinated by AIs.
Yeah, that's a good way to put it.
Are there any other questions about something specific people want to know about?
Well, how do they get to your forums would be a good one.
MakerDAO.com, and then click on forum. Overall, Ethereum is going to have just tons of different stuff. Like there's going to be so much crazy shit happening on Ethereum, really. Like there are some really intelligent people involved, and there are also like real financial people who actually understand like the future of stablecoins, for instance, and who understand the potential of each type of smart contract there is. Like I'm personally of the opinion that stable assets are like the biggest value proposition in blockchain technology, which is also why I like BitShares, right? I mean, BitShares it was all about that thing, right? It's about the exchange, it's about stable value, it's about like assets and then money, banking, and so on. And we are trying to have Maker as the financial, like this niche on the Ethereum blockchain, and then we are just optimizing for the stable asset itself and trying to spread that everywhere possible. And that's why, like in the long run, I could see it as because one of the things we will do is we will if like as soon as we can, we will use BitShares as collateral for the DAI, for instance. There's no reason for us not to do it, right? It's just more collateral just means more diversity, and that just means less risk and more happiness for everyone, and better access to capital for everyone, and higher yields, and so on. And that also means that it makes perfect sense for us if we're collateralizing the DAI with BitShares. It also makes perfect sense for us to have the DAI on the BitShares blockchain itself, right? Because it means it's basically like like I said earlier, it's a complex BitUSD that you can then use for like the products where you want to have like this very complex, I guess, like very very stable, very autonomously like working to always keep itself stable over time to the point where you will feel like that's our goal will be that the DAI is the asset that everyone thinks of as the lowest risk in the entire economy. That is basically what we want it to be. So like if you literally are not able, like if you're just have like you just want to have your money somewhere, and you don't want to worry or like to make any sort of security considerations, then that's where we're gonna try to position the DAI as the asset that you just put money into when you don't know where else you're gonna hold your money, and then we will try to make it available on every blockchain and everywhere, and I'm also expecting that it will mean in the long run blockchains will want to have the DAI on them, right? And they will actively work to have a two-way peg with the whatever, like one of the blockchains that we're already existing on, because it's just something of value they can offer to their users, right?
Definitely.
Okay, so someone just asked what we're planning to peg the DAI to. That's a very good question. And the answer is, in the very beginning, we want to peg it to the USD. But that's not where we want to keep it in the long run. We want to first move to a currency basket, and then eventually a CPI basket. So what a currency basket is, it's like multiple national currencies put together. And as he's writing here, there is the most famous currency basket in existence is the SDR, the special drawing rights, which is a mix of US dollar, euro, British pounds, and Japanese yen, which is decided on by the IMF, the International Monetary Fund, and then every 5 years they revise it. And this is basically some like world domination play that they did like 30 years ago. They invented the SDR because they wanted to make a world currency that governments could use to settle their international debts in, basically, and help them with ensuring liquidity. And yeah, what's the benefit of a basket of currencies versus a single currency? And the benefit basically is that there's less volatility to any given national currency. So there's less, like let's say the CNY, for instance.
Así desequilibrado.
Is that Spanish? Yeah, so anyway, the advantage of a basket of currencies versus a single currency is it means less volatility to other national currencies. So the CNY, for instance, right? CNY, the volatility, like the volatility of the USD CNY pair is slightly higher than the volatility of the SDR CNY pair. And this is even more pronounced with things like Eastern European currencies, for instance, and other currencies that are not that exposed to the US economy, but more exposed to the European economy, for instance. They have a big advantage. They are much less volatile in terms of the SDR than they are in the terms of the USD, because the SDR includes the euro. And one of the things that's going to happen very soon, actually this October, is that the SDR is going to be rebalanced. That happens every 5 years and is done by the IMF in some stupid committee decision, I guess. But one of the things that might happen this time is that they include the CNY, which would be really interesting, because that's something that's been highly anticipated.
I'm pretty sure that China's upset because they haven't.
Well, they haven't done it yet. Like, so we don't know yet what's going to happen with it. And one of the there's an argument against it because China recently did this very drastic devaluation of the yuan, where it devalued it, I think, like 4 point something within 3 days.
Ago.
Yeah. But on the other hand, that was actually they moved it towards the free market rate. So it wasn't actually like a market negative move they did. They just did it in a stupid way. Like, they should have just floated the yuan many years ago anyway. So there's no reason why they're still trying to control it. But yeah. If the CNY gets included in the SDR, then we are definitely going to use the SDR as our peg target in the medium term.
Well, this comes down to actually a question that I think really brings to bear the benefits of BitShares, at least, because the stability generally has a correlation with the volume of the asset too, right? Which is generally why you would say, if we have a basket of currencies, it's going to be more stable than a single currency, which just makes complete sense, because when the US dollar is going down, the CNY might be going up, right? So
well, this actually it's not even possible to say the US dollar is going down and the CNY is going up. Like you have to, the only thing you can express it in is saying that like the CNY is increasing in dollar terms, for instance, which is how it often happens, right? I mean, that's exactly what you're describing there. And that's why it's an advantage with the currency basket, for instance, because when you have some like a movement in, let's say, the US, right? Some crazy shit happens in the US and the US dollar is affected in some way. Then it might be annoying for some guy in, let's say, China or the Philippines or something to have to be exposed to that dramatically, as if they were in the US and it was happening to them personally, whatever is happening in the US. And with a currency basket instead, it'll be like, okay, they'll feel some impact, but only the impact that is, that is passed on to the entire global economy from that. Like that's how they try to design the SDR basket. Okay, but in the very long run, obviously we want some pesky government institution like the IMF. So in the very long run, our goal is to make an autonomous, universal global CPI basket. What CPI is consumer price int, right? So what we want to do is we want to figure out a way to actually measure true value stability denominated in like consumer in terms of what a consumer can buy with their money, because this is what you actually care about, right? This is what you want your money to continuously be worth the same amount of bread and iPhones and houses, and okay, maybe not houses, I don't know actually if that should be included, but that's something we can figure out in the future, right?
Least, right?
That's something that's going to be super complicated to do, and it will also be very costly, but ultimately it could be like it could be really good if we make a system like that and we actually make it work, because it would mean that we would have this currency that everyone could trust, and you would actually have like provable value stability in the same way that you right now have, you have Bitcoins that just cannot be stolen. You'd be able to in the long run have like coins that not only can they not be stolen, but they also just cannot not be worth consumer goods, right? The same kind of stuff that you could buy with them yesterday, you'll be able to buy that with them today as well, because of this consumer price pecking, yada yada, which is coming in the future at some point.
When you're saying you see MKRCOIN on the BitShares blockchain in the future, do you mean implementing it with a private asset? Probably not. Or do you mean using a potential future scripting environment, or do you mean something else?
Well, it wouldn't really be a user issued asset. Isn't really possible, right?
Sorry,
because it's not trustless.
Asset, a private market pegged asset. Sorry.
A market pegged asset wouldn't be real MKR either, because it would have to be collateralized by something else. So I think, you're right. It's either going to be done in the scripting environment. So if there is some Turing complete scripting system, which I'm sure there will be someday. At some point in the future, when all the other to-do tasks are like done, somewhere at the bottom of Bytemaster's list or whatever. I don't know if it's the bottom. I guess there's so many stuff that he wants to implement first before he will do Turing complete. But I think at some point he will want to do it, right? It's going to happen. And then we could do the two-way peg. Alternatively, if you wanted earlier, we could actually have a customized two-way peg that is written directly into the client and stuff. And that's, who knows, maybe that's how they actually want to do it. Maybe they will want to never have scripting and will just do these things manually.
Well, I'll tell you this. I'm planning on having in the future, right? Panels of different project heads and spokespersons, and these are the types of things that I would like to do. Go a little bit more meta as we start expanding and bringing in more people like you, Bytemaster, and all them to talk about how they can work together. So these might be places that we can explore in the future.
Right. By the way, so this has now been how long? 1.5 hours or something?
It always happens, man. I try to cut it off and I never can.
It's no problem. I'm planning to stay here. I'm in Europe right now, so it's not too late for me. I'm literally just gonna stay and answer questions until there's no people left, more or less. But I'm thinking that now, like, I think we have covered the most important things, and like from now on, let's just do like free speech, or like free talking, or whatever we want to do, and talk about anything basically. But I will just continuously answer any questions, whatever, regarding Maker or whatever you want to know.
Let's end the formal portion of it, and then we can start recording the other portion, this being primarily the entire community questions area. I actually have to go myself here shortly. I have, go ahead and do the question answer thing. We try to keep the content generally around an hour. But, obviously we can split it up into two, and we can post this as well as like a part 2.